welcome. You're watching Earnings Edge. I'm Mahima Vachhajani. Well, before we move on to the management that we have on the show for today, which is IndiaMART, let's take a look at how Q2 has panned out for IndiaMART InterMESH. Well, in terms of the numbers have fared out well. Revenue was up around 18%. EBITDA did see a growth of 68%. Margins did see a significant uptick from a 27% mark to 38.7% mark, and net profit was up around 95%. But the stock has taken a significant hit on the back of certain performance metrics, which is the collections as well as the paid subscribers. Collection growth slowed down to around 5% YOY, which was around 14% in Q1 FY25, which has been in double digits, but this is the first time it has been in single digits. So one pain point was collections, and the second was paid subscriber has remained muted for this quarter. It was around 2390, and the last quarters also it's remained muted, which have been in the range of roughly 1.5k to around 3000. So couple of factors why the stock has taken a significant hit. The stock is down around 17%. Couple of brokerages have also given caution on the particular company. But to discuss more about how the quarter has panned out and what the future of the company looks like, we're joined by Mr. Dinesh Agarwal, who is the CEO of IndiaMART InterMESH, who joins now. Mr. Dinesh, welcome to NDTV Profit. My first question to you is that, a couple of things have happened this quarter. Numbers overall look good, but there has been certain pain points. So I want to understand what went wrong and what has worked well in this quarter.
So what has worked is, obviously if you see revenue from operations, it has been growing at 18% because that is coming from deferred revenue. Deferred revenue has also grown at about 18% per year. And the collection from customer has grown at about 5%, and paying subscriber addition has grown at about 4%. So two things that have not done according to our expectations are paying subscriber addition, which has been the problem for the last 4 or 5 quarters, as well as this particular quarter where the collection from customer used to be around 15-odd%, that has come down to 5-odd%. This is one-off quarter, I tend to believe, and we will probably bounce back on the collections from customer to a double digit. But our main area that needs to be fixed is the paying subscriber addition for now.
Right, and paid customer additions has remained muted, which is a matter of concern. You've said that the focus remains on recovery of this particular segment. Now, how does recovery in paid customer play out, and when will it recover? And also, overall, how will it impact the financials?
See, we have been thinking that it should take 2 to 3 quarters, but that has not been the case. So I'm staying away from committing anything in terms of the timing. What we are trying to do is 2-3 folds. One, we are trying to see which particular segments of our customer by geography and by category or industry are not working well for us, and we are trying to move away our focus from those. Second, we had a very new servicing team, which we are trying to do as much as training and customer hand-holding that we can. Third is the buyer and supplier ratio. If you really see our unique buyer to inquiries delivered ratio, that we are trying to modify sharply in favor of 1:4 from 1:5, 1:5.5 that we used to have. So these are the 3 things that we are doing. Hopefully, all of these put together result into better subscriber addition in times to come.
All right, Mr. Dinesh, before I move on to the next question, Mr. Dinesh, you talked about certain categories and segments will go through certain changes. So I want to understand that which are these categories and segments that will go through the changes first of all, and what will be the strategy overall?
So these are micro segments, very small segments. So, for example, some of those tier 4 customers may not be working out. Some of those, but that cannot be generalized because many of the tier 3, tier 4 cities are the producers for the entire nation. But some of those could be only locally doing businesses. Similarly, certain categories like service categories, we have still not done very good. While in the manufacturing categories, we continue to do well. So there are thousands of small segments, and we try to see which particular segment not to focus on for the sales.
Right. Mr. Dinesh, EBITDA margin has significantly improved to the 38% mark. But in your con call, you've said that it will remain within the range of 33 to 34% going ahead. So I want to understand as to what will be the certain range of margins by the end of FY25. Will it be between 33 to 34% or it will go beyond that 38% mark?
If you really see collection from customer and the cash generated from operating activities, that is the leading indicator of the revenue growth and margin growth, and that has been trending in the guided manner. What happens is, because the collection from customer goes into the deferred revenue and then deferred revenue to revenue from operation, that is why you are seeing many a times what happens, our collection runs at 25%, but while revenue still is at 15 to 20% growth rate. Now that collection has come down, revenue is continuing to grow at 15-20% growth rate. That is why you are seeing the timing difference that is visible in these kind of businesses where the subscription money is taken in advance. In our case, about average deferred revenue aging is about 18 to 20 months.
Right, got it. But collection growth has slowed down sharply, Mr. Dinesh, to 5% YY from the 14% mark in Q1 FY25, and usually they've been in double digits. So when do you expect recovery here?
Yeah, collection is, this is the only one quarter that we have seen that it has gone down to the single digit percentage and lower single digit percentage. I think we will try and come back to double digit immediately. If not this quarter, maybe next quarter by Q4 certainly.
Got it. But Mr. Dinesh, I want to understand that what has exactly gone wrong with the collections this time?
Execution, I think we missed certain execution, certain customers renewal and certain customer upgrade. I think we should be able to fix that in few months.
Got it. And you said that this will go to double digit in second half of FY25 collections, to be specific. The impact of this overall on the financials, what will be that?
Yeah, so I think revenue and collection both will trend similarly towards in the long run, and so our expectation is that by that time, if we can fix the paying subscriber addition, we can again start to look forward towards growth.
Right, but I want to understand the overall impact of rising collections on the top line.
Okay, so that needs to be calculated. At the run rate basis, I think we are on a revenue run rate of about 350 crores of revenue run rate. That gives us about 1,500 crores, 1,400 crores of revenue, and on a net profit run rate, I think we are at about 125 crores, so about 500 crores of net profit, maybe plus minus, because this is only a run rate numbers. The quarter 4 is very different than quarter 1, 2, 3.
All right, well, that was Mr. Dinesh Agarwal of IndiaMART InterMESH talking about as to how the quarter has gone by and how future of the company looks like. But next up,